Esili, just your views on the market's performance today?
Hi, Lerato. Thanks for bringing me on the program. The market closed roughly flat. It was driven largely by profit taking from, I think, largely brokers and speculators. It basically signaled the end of the strong rally we've had over the last week, and probably some sort of slowdown in the run-up in the coming week.
All right, obviously the rally that you're referring to was boosted by the promulgation of the AMCON bill, and that's taken attention away from other stocks. Let's focus on the cement industry in Nigeria. How well have cement stocks fared this year and over the last week in particular?
They've done pretty well. They've been up roughly about 50% this year. In the previous year, they climbed about 51, 52% as well. The rally that they've witnessed has been largely driven by flight to safety and also investors just betting on the earnings potential of the cement companies. After all, they will increase their earnings by roughly 119% over the next 3 years.
All right, let's talk about your top picks, the Benue Cement Company and Ashaka Cement. Just a summary of their investment case.
Now, our criteria in picking our winners in that sector were primarily one of the potential to increase output or scale, and two was energy efficiency. And now, firstly, on the question of scale, we think that for any cement company to survive in the next couple of years, particularly given the strong demand for cement in Nigeria versus supply, we think we need to have massive scale, and that is where a company like BCC comes in. BCC, as a standalone, is adding about 1.2 million tons over the next 2 years, and before the end of the year, we'll be getting announcements from the Dangote Group about further integration into that cement company, bringing total capacity to about roughly 18.5 million tons by the end of 2011.
All right, you've spoken to us about capacity and output at BCC. The company's margin ratio for 2010 is 53%, whereas for the sector, the cement sector, the average is 26%. What else is driving this super performance?
BCC has roughly been driven by its the efficiency of its plants relative to its peers. It's a fairly new plant. It's less than or roughly around 2 years old. And this compares with the average in the industry of about 25 years plus. BCC also has enjoyed, I think, relatively cheap pricing on raw materials, being a member of the Dangote Group, whereas its peers, with capacities of roughly 2 million in the case of Lafarge Wabco, and about 500,000 in the case of Ashaka Cement, CCNN, and also 850,000 in the case of Ashaka. They obviously don't have the scale, to benefit from, lower unit pricing.
Let's talk about Ashaka Cement a little bit. Most of the operations in northern Nigeria, whereas for other cement companies, their industrial base is the southern part of the country. Has that given them a competitive advantage?
I don't think, being located in the north gives you any particular advantage, but I think rather it's a case of, being isolated in that path or the northern part of Nigeria, which is roughly northeast Nigeria, and they have almost no competition in that area. That is why they've done pretty well. But I think that is one factor or an upside that will probably help them in the future. It hasn't really paid much for them in the previous years. You also have a company like BCC as well, CCNN, which is also located in the north in Sokoto, which is northwest, and that company as well has benefited from the fact that it is about the only cement manufacturer in that area. But I think that these are issues or factors that would drive their earnings more in the future than in the past, because those two companies in particular haven't really been the strongest of their peers.